Hello and welcome. My name is Rebecca Lammers. I am the chair of the Democrats Abroad Taxation Task Force. I'm so glad that you've all joined us here today on what is, for many people, a very painful day that marks the IRS filing deadline for Americans abroad. Taxes are not an easy topic for Americans abroad. We all suffer from the laws that don't treat us very fairly. And I'm going to get into more of this in a little bit, but I just wanted to mention that up front and thank you all for joining us for this webinar today. So the webinar is the 2024 tax deadline webinar. Before we get into it, it would be really great to fill in our feedback form. Your feedback is really critical in order to help us improve on the webinars that Democrats Abroad hosts. So please make sure that you fill in the feedback form at the end of the webinar. We'll remind you again, but the more people that give us feedback, the more that we can improve on these webinars in the future. So before we get started, I need to read this disclaimer. So Democrats Abroad cannot provide individual tax advice. Advice requires consideration of your individual circumstances and needs, none of which can be done at this event. We are not tax lawyers, accountants, or advisors. Please consult a professional tax advisor, accountant, return preparer when addressing your personal tax matters. Democrats Abroad does not endorse or recommend companies or individuals attending or hosting this event. The views expressed at the event are those of the respective individuals and companies, not Democrats Abroad. No liability is accepted by Democrats Abroad for the opinions expressed or for any errors or omissions expressed about matters of tax in any country, your financial planning, or your legal obligations. If you are in need of tax advice, you can consult the IRS Tax Return Preparer directory to find an advisor or tax return preparer near you, or providing online services to meet your needs and budget, though buyers need always beware. So now that we have that out of the way, we finished introductions and housekeeping. We're now going to go into my presentation, and then we also have Robert Levitt, who is the one of the deputy chairs for the Democrats Abroad Taxation Task Force, and also an investment advisor to talk about those kind of related matters. And then we will do a Democrats Abroad public service announcement, and that's when we'll then take questions for the Q&A. So with that, I will go ahead and get into it. So what are some of the problems that Americans abroad face? So I think you wouldn't be on this webinar if you weren't at least slightly conscious of some of the tax problems. So Americans abroad are subject to US taxation on our worldwide income, regardless of where we live in the world, regardless of however long we live in the world. We've lived outside of the US, and also regardless of whether we have actually lived in the US at all. There are many US citizens who haven't even touched US soil, yet are still subject to US taxation. We are all subject to filing a US tax return annually, even when no tax is due. And this is something that really throws people off a lot of the time, and they didn't realize, or may have in the past received wrong or bad information which said because you don't owe any US tax means that you don't have to file a tax return. Unfortunately, that's not the case. You actually do have to file a tax return in order to demonstrate that you don't owe any US tax. And the majority of people who live overseas don't owe. However, so based on filing statistics, 60% of returns filed from abroad owe no US tax because we're already paying tax in our country of residence. And then the other 40%, it varies, but somebody could owe $1, and then that qualifies them in the 40%, but the majority don't owe anything. We're also restricted from financial products in our country of residence, which a lot of people will email us and they say it feels very unfair that I'm not able to open up a savings account or an investment account or a retirement product the same as other people in my country of residence. And also, the cost of maintaining tax compliance is very complicated and expensive. There people who are spending money in the sums of thousands of dollars in order to file their US tax return because it's so complicated. So these are just some of the main issues that people tend to complain about. Um, why is it this way? I think it's important to take a step back here and think about well, the way that the United States is structured, it has what's called a citizenship-based tax system, versus the rest of the world, which has a residency-based tax system. So we, as U.S. citizens, are taxed based on being a U.S. citizen. And when it comes to us living in a different country, um, these two systems are then incompatible. It makes it very difficult when you're trying to operate under two very different systems, right? So this is a problem. Also, the tax code is a patchwork quilt. So what I mean by that is that the tax code is constantly being changed and tweaked and amended, and it has grown into like it's one of the biggest tax codes. Like if you were to print it out, it's like hundreds and hundreds of pages, if maybe not thousands. Um, and Congress is passing new tax laws, and it gets added to. So rather than trying to make it simple, they're just adding more and more onto it. So it keeps getting more complicated. And then on top of that, what happens is that Congress doesn't think about Americans abroad when drafting these tax bills, and writing legislation, which therefore causes unintended consequences. So, for example, the recent 2017 big tax package that passed back then, it had an unintended consequence of making it very difficult for small and medium-sized business owners abroad to be able to continue to conduct their business because it made their tax filings ginormous, and also very complicated. Um, so things like that happen on an ongoing basis because we're not being thought about in the law writing process. Um, Another issue is that we literally are not in the country to be able to go and express our opinions and rights. And I know that a lot of you probably, and I know many people I talk to, I encourage to contact their members of Congress. But even there, it can be very difficult to do that. A lot of people don't realize that they still have representation in the US after they leave the country. And we're literally out of sight, out of mind. So it it's not like when you live stateside where you can like drive a few hours or drive across country or rock up to the door and say, hey, this is wrong and you Congress needs to fix this. So we don't have that luxury. People do fly there. It does happen, but it's just not as much or as easily accessible for us. um, we also don't get very much support from the federal agencies, so that includes the IRS, but that also includes the State Department. So we hear stories of people contacting their local embassy or consulate asking for assistance in terms of figuring out how to file. And what happens is they either don't hear anything back, um, or it's very poor customer service and they're unable to get through when they call. It's just very, very minimal, if anything at all. Um, and the bottom line is that in terms of how legislation is passed these days, it is a very broken and corrupt system. And I mean, you don't need you all read the news and probably are aware of all the different kinds of things going on in our political system. It is very difficult to do anything, especially in the current congressional atmosphere. So all of these kind of things kind of build up to the why are things so difficult and complicated. So there are also these barriers that we face in terms of like there's just a lack of clarity of how to file a tax return. Like a really basic thing. One of the top questions that we get is how do I file a tax return? Where do I go? Where do I send it to? Um, it's really difficult to figure it out because the IRS website is really unclear, right? There's also no support from the local embassies or consulates, like I just mentioned. And there's also insufficient customer support from the IRS. So like if somebody does actually like call the IRS, you might be on hold for hours and then get hung up on. And that's really expensive to be calling the US internationally, right? Um, and then once you do get through to somebody, they don't know the answer to your question and they're not able to help. Um, and then on top of that, it's like where else are you supposed to go if you can't get support from the IRS themselves or from your local embassy or consulate? So that's where a lot of people will turn to tax professionals in order to assist. But a lot of those professionals are expensive, right? But they're expensive for a reason. It's because um, being an expat tax accountant or specialist, that's the key word, specialist, is that these people have done education, and more often than not, a lot of them have two different qualifications, both for the US as well as for their country of residence. And when you have more education and you have more expertise, then you charge more for that. That makes sense, you know? Um, but it can add up. And I think a lot of people get really frustrated in terms of having to pay a lot of money to prove that they've already paid tax in their country of residence and don't owe any US tax. And then finally, there's just a lack of acknowledgement from the government that American abroad lives are impacted by these issues. And that's kind of what is driving a lot of people to think, how do I get out of this? Right? So I wanted to share some basic information and resources that might be able to help you in terms of framing the conversation and knowing and understanding more about these issues and why. Um, but also arming you with information that will help and perhaps might make you realize that maybe it's not as bad, but maybe it is. I don't know. It does a lot of the time come down to your personal circumstances, but I wanted to start with talking about the Taxpayer Bill of Rights. I didn't even know that there was a Taxpayer Bill of Rights until I started looking into this. And like one of the most fundamental things that you should know is that you have rights. Because I think a lot of people feel like they're lost and they don't have any right to anything when it comes to the tax problems that people face. So the bottom line is that you have rights. This is the Taxpayer Bill of Rights from the IRS. And it's a framework for effective tax administration. I'm just going to read them because they're that important. You have the right to be informed. You have the right to quality service. You have a right to pay no more than the correct amount of tax. You have the right to challenge the IRS's position and be heard. The right to appeal an IRS decision in an independent forum. The right to finality. The right to privacy. The right to confidentiality, the right to retain representation, and the right to a fair and just tax system. Now, I know you might be looking at some of those and thinking like, oh, that's ironic because I don't feel like I get any of those at all. Um, but next time you have to call the IRS, and if they're not providing a good service, like you're within your right to remind them that you have a right to a quality service or a right to a fair and just tax system under the Taxpayer Bill of Rights. You're allowed to do that. So this is just like a fundamental thing that I think a lot of people don't know about, and is important for you to know. The other thing for you to be aware of is that it's legal for you to find ways to reduce or eliminate your taxes. So this is a quote from a court ruling. I think it was from the 50s. Anyway, I've cited the link there, where a taxpayer has the legal right to decrease the amount of what otherwise would be as taxes or to avoid them altogether by means which the law permits. So basically what that's saying, like you hear it in the news, right? Like there's all of these, lots of people finding ways to reduce or eliminate their taxes, and you have that right as well. This is totally within your right. And there's a lot of different ways to do that as an American abroad. For example, using the foreign tax credits or the foreign earned income exclusion. Like those are all different ways of either decreasing or eliminating your US tax, whatever you may owe. So it's something for you to keep in mind. And then the other thing for you to be aware of is that you are responsible for the accuracy of your tax return, even if someone else prepares it for you. Here again, we have gotten a number of emails from people over the years who have said, I feel like I've been ripped off. I found out that whoever prepared my return didn't do it correctly. And then that person has to go through an expensive exercise of paying somebody else to do it at another additional great expense. Um, and what's really important for you to be aware of up front is that I think a lot of people treat an accountant, or when they outsource preparing their tax return to somebody else, they treat it like an insurance policy. And that's really not how you should be treating a tax professional. A tax professional is somebody that is obviously going to be more knowledgeable and should be able to do a very good job. But ultimately, it is your name on the tax return. You are the one that is signing it. So you are the responsible party for your own tax return, even when under audit. Another mistake I hear from people is they think that if they go under audit and they paid a tax professional, that the tax professional is therefore liable. And obviously, like, it depends on the agreement that you have with that tax professional. Um, and they will help out, but they might charge you more in order to help assist you with an audit, for example. And they're within their right to do that because it means more work, right? So I think the main thing here is that you are responsible for your own tax filing. And that's something that you should really keep in mind when looking at outsourcing or paying somebody else to prepare your return for you. So this leads me to the top 5 challenges, which I wanted to hit on, which this is just based on the pre-submitted questions for this webinar, from our past surveys, and also emails that we get from people. And I'm just going to go through, I'm gonna go through a few of them. And the one thing I wanted to mention, I just realized I didn't mention it earlier, is that um, it's not like when we move abroad, we get like an orientation program from our local embassy that's like, oh, hey, so now that you're an American abroad, this is how you file your tax return. This is how you renew your passport. Like, nobody gets any kind of education, right? Like, everybody is pretty much left to their own devices. And I think that's what creates a lot of confusion with people, is that they're really seeking out information and resources to figure out how to file a tax return, what they're supposed to be doing. And more often than not, we end up getting information from um, uh, sources that aren't necessarily reliable. So people will go into like Facebook groups, or they might go and search online, and there's a lot of conflicting information about a lot of this stuff, right? Um, and it's hard. Like there's no doubt about it that this stuff is hard. So that's where like a lot of us are coming from, is like we're trying to figure this out by ourselves because we're not getting accurate or reliable information from a trustworthy source. So yeah, that's a big problem. But I'm gonna go with number 1 here, which is how to file for free or low cost. So I talked about how people feel like it's unfair that they have to pay an expensive accountant or tax prep or whatever in order to file their US tax return. Well, I mean, there are ways to file for free or low cost. So for example, this blog post, which I wrote, reviewing the IRS free file providers. So there's 8 different online tax prep software providers, which have an agreement with the IRS to provide free online tax prep software for people under a certain income or in a certain age range. There's different criteria for each one of the online tax prep software options, but they exist. And I know that a lot of people have read that blog and saved a lot of money. So, and the IRS doesn't do a very good job of promoting this. They like only about 3% of tax returns are filed through the free file providers. So I'm sharing this with you in order to help you save money. And that's not to say that these are perfect solutions. A lot of them feel like you're trying to fit a square peg in a round hole, but they do work. We do hear from lots of people that these options do work very well. Um, and then also there's some blogs here on how to find an accountant or a tax professional, both that will fit within your budget, as well as helping you to save money. Because ultimately that's really what an accountant should be doing, is doing your tax return for you so that you're not having to pay any more tax than you actually owe, which for 60% of us is nothing. So, and also the different types of tax professionals, because a lot of people will come to us and they're like, oh, I need a tax lawyer. And it's like, no, you don't need a tax lawyer in order to file your return. And there are different types of tax professionals, from accountants to enrolled agents, and different things like that. So knowing about the different options is really helpful. And then finally, the one of the best links in order to find tax professionals is to use the IRS tax return preparer directory, which is the most reliable source for finding those tax professionals that are recognized by the IRS. So that's one. The other one is IRS customer service. So how are you supposed to get help, right? So this is where I think it's worth pointing out Democrats Abroad advocacy work, in terms of like, we've been having conversations with Congress in terms of like making sure that there's funding allocated to reopen the tax attaches at embassies and consulates around the world. There used to be 15 around the world up until 2015, when the funding was pulled. But with the recent injection of funding into the IRS, one of the priorities that we have is reopening those tax attaches at the embassies and consulates in order for people who are living in those countries to get face-to-face assistance. Also, just increasing support for Americans abroad in general from the IRS. The IRS recognizes that they refer to us as international taxpayers, are an underserved community. There are a lot of different stateside resources that are available that are not available to us. And so we're having ongoing conversations about that, as well as expanding the new direct file program for Americans abroad for next year. And Direct File was a pilot program this year, where people were able to file directly with the IRS for the first time for free. And I know that that's standard practice in other countries, but the IRS has been severely underfunded for a very long time, and has been politicized for a very long time as well. So the tax prep industry has been preventing any kind of way of filing directly with the IRS for a long time, but this year was the first time people could file directly, and it will expand for next year. So that's another priority. And so some additional resources here in terms of how to call the IRS for free, as well as how to set up your own online IRS, and also it's the same account for your Social Security account for Americans abroad. We actually hosted a webinar on this last year, and it's a real game changer. I mean, it really is. For you to be able to see exactly what the IRS has on you is really helpful, and you can watch the recording in order to find out how to do it, or you can just go ahead and go to the irs.gov website and set up your online account yourself. But some of the great features that have just launched is you can sign up for paperless correspondence. So that means that you don't have to wait to get a letter in the mail through international mail, and it arrives 2 months later after a deadline that they said you needed to respond to. So that will hopefully be gone, and at least that problem will be gone, so that if you have an online IRS account, you can sign up for paperless correspondence and get all of your notices to your account. And by next year, they will be able to process all returns digitally as well through your online IRS account. And in the next 10 years, you'll be able to make and receive payments to a non-US bank account, and also file directly online with the IRS, which is the direct file program that I just mentioned. So there are developments that are coming, there are changes that are coming. Um, and then one of the other biggest things that we get is people who are concerned about US tax on the sale of their non-US home. And so some of the options, and I'm not saying this is an exhaustive list, but these are just kind of some options. So when you file your return, if you've lived in the home for 2 out of the last 5 years, you qualify for the home sale exemption. So any gain of up to 250,000 is exempt. Another way to increase that is if you file jointly with your partner, uh, that increases to 500,000. Some other options that people use are gifting your home to your non-US to a non-US person. So sometimes that might be a non-US spouse. And another thing, in order to either reduce or eliminate your US tax obligation, is using up to 10 years carryover of any unused foreign tax credits. And so these are the kind of things in terms of like improving and understanding how things work that can help. So now I'm going to hand it over to Robert Levitt, who's going to talk about the savings investing part of this. So take it away, Robert.
Okay, so let's go to the next slide. And I want to start where Rebecca basically left off. I mean, one of the points she made was that people, they decide to leave the United States to move overseas, and they have really no idea of what it is that they're supposed to do, or that they have to do things differently than if, well, they're really, there's no way, very difficult to get educated on what you're supposed to do. So that became a problem really in 2014 when two things happened. The first one was FATCA. And in the case of FATCA, what happened was it forced, and it came into place over a few years. Maybe we could say it's still coming into place, but it forced all foreign financial institutions to report to the US, to the IRS, on any US citizen that was one of their customers. And so in reality, people owned investments in things that were not tax beneficial. Let's say it like this. I don't want to use too much alphabet soup here, but they owned investments that the IRS would maybe consider abusive. Not necessarily that they were abusive, or they certainly weren't used for those purposes, but the IRS decided that maybe they were being used to avoid paying taxes. And so you have a situation now in 2014 where the banks are reporting, and that brought about a realization that what you're doing may not be appropriate. And it's still impacting people very much today, where they're learning that they own something called a PFIX and other alphabet soups that were products that were sold or intended to be sold to residents of their country. But because of this dual US and foreign tax issues, they were not considered appropriate by the IRS. And so before the issue would be, well, who would know? Who would find out? Nobody would find out. And I don't know because I just went to the bank or the advisor and they said I could buy this. And so I did. With FATCA, they learned that they learned that they were now, and they're learning, I should say, people are still becoming aware that they own things that the IRS considers to be a problem. And slowly but surely, the tax authorities in the United States have the data that says you own whatever it is that you own, and they know that these things are problematic. So they knock on more and more doors and find out that there are US citizens who actually didn't even realize they had to file their tax returns in the United States, that there are US citizens that somehow believe that if the investment is in the United States, they pay taxes in the US, and if they avoid all kinds of investments outside the United States, they therefore they don't have to pay taxes to their home country. And all of this actually is misconception. It doesn't work like that. And each country has its own tax treaty. So each country is different. I can't here give you all the differences, but basically every country has its own rules and every country has its own tax agreement with the US. And therefore, what is done in France, for example, is very different than what's done in Italy. These are just neighboring countries, but the tax consequences are very, very different. And people just had no education. It's quite challenging to get answers that, from knowledgeable people because there's just not a lot of people that are really aware of these things. But because of FATCA now, you can't just avoid it. You can't say, well, I don't know, or I didn't realize, because now the information has been sent on you by your financial institution to the United States. And the second big regulatory issue was in 2014, was called, it affected people in Europe, but it was called MiFID II. And it said that the purchase of securities in the United States, such as ETFs, for example, are really no longer allowed. And the reason this happened, they didn't come out and say, okay, you can't buy investments in the United States. What they said is that they were trying to protect the residents of their country, and that if you were going to buy certain kinds of investments, for example, a US exchange traded fund, like a mutual fund, many people like these kinds of funds because they could invest like in the index, the S&P 500 or things like this. Is very popular for investing for Americans to buy these exchange traded funds, ETFs. But what they said was, okay, we will allow you to buy investments in other countries, but they have to provide you in 3 pages a document that explains 3 things. 1, what the investment is. 2, what the risks are, and 3, what the return is expected to be. So if you think about it, it makes a lot of sense. You get 3 pages, and basically it tells you what you're investing in and what you should expect to earn and what the risks are. The problem is that it goes contra to what the US and the Securities and Exchange Commission, the SEC, says. So the SEC says, and normally with the US, you get a very thick prospectus filled with legalese that maybe nobody even reads. But in the US, the SEC says you're not allowed to project forward returns. So MiFID says you must project forward returns. So what happened, and again, it was passed in 2014, but it slowly is taking effect, is that US or European residents are not allowed to buy many of the investments that you would buy if you were a US resident. Now, none of this changes, by the way, if you are a US citizen or not a US citizen. You still can't buy them if you are a European resident. Now, There are exceptions to this. For example, if you trade hundreds of thousands of euros every year, you can be classified as what they call a professional investor. Or if you have an IRA account, or certain kinds of European pension funds will allow you to buy ETFs, not necessarily ETFs from the US, but very similar products that are sold in Europe. FATCA and various laws by the IRS doesn't allow you to buy the European version. So it's like a lot of complexity and what you can do and what you can't do. Advisors in the US have absolutely no idea because they're not aware of the rules regarding the tax treaties. And some countries, for example, I can buy in the US, I can buy municipal bonds, but in many countries in Europe, municipal bonds, or maybe around the world, municipal bonds are actually taxed. So, somebody who doesn't know what the various rules or the various tax treaties are, they don't really understand that what they can do in the US, they can't necessarily do elsewhere. But okay, the key point to keep in mind is that there was two new laws. They took many years to come into impact. And initially, what happened was it was a very brutal experience. Nobody knew what to do. They were finding that they had all kinds of tax obligations and fees and fines and compliance requirements. And this was the first shock. But as time has passed, the problems have begun to be realized. So let's go, please, to the next slide. So investing. Okay, so the first issue, and this is one that a lot of people had asked in the questions, was they wanted to know why they could no longer use their U.S. Investment advisor when they lived overseas, or even many firms that are in the U.S. like Vanguard or others, when they live someplace else, they can't continue with them, or their accounts are closed. There are many firms, as they become aware, they realize they are not able to do that. Now, why is it? It's because you are regulated. Well, the regulation is based on where you are resident. So if you are a resident in the United States, you are subject to the regulations of the US SEC, the Securities and Exchange Commission. But if you are regulated in a different country, for example, in Europe, then you are subject to the European regulations, right? Which is okay. There's no law that prohibits a US company or a US advisor to be registered in Europe. It's very possible. It's just that many firms have made the decision at this point not to do it. Vanguard has made the decision not to allow any account to be held in Europe because they have not yet decided that they want to be regulated in Europe. And there's a fear that it's a complex issue. And maybe there's also the consideration that there may not be what they feel is a substantial amount of financial gain to do it. And therefore they don't. A US stockbroker or US financial advisor is licensed by the SEC to serve US residents, as they are not licensed by a foreign jurisdiction to serve a US client who may be a US citizen but is a resident of that country. So this is why they close the accounts. Some brokers they continue to try to provide advice, but I think it's really challenging for them because each country is governed not only by a set of laws, but by a tax treaty. And if you are not familiar with the tax treaty, you more than likely don't understand that the US taxes are not the same as taxes in a European country. So what happens in many cases is people continue to keep these accounts. They hire a US based accountant who also is not aware. And what they do is They get a 1099, which is the tax form that the brokers provide to you at the end of the year. And the accountant takes the number, assumes it all is taxed in the United States, and you pay your US taxes. Problem is, that's not the way it works in most of these countries. Most of these countries, and I'm vastly generalizing, but most of the countries, you pay the tax in the country that you live. So the accountant who gets this 1099, he doesn't ever look at what the investments are. He doesn't really understand that these are not taxed in the United States, that they're taxed elsewhere. And so what's happening is that these firms are becoming more and more aware that they're doing things that are not appropriate. And then the individuals are becoming more and more aware that they're doing things that are not appropriate. And groups like Democrats Abroad and tries to do webinars to educate you as to what you can and what you can't do. And typically you can do everything you need to do or you want to do, but you have to do it in a certain way. You have to work with firms that are actually licensed to serve residents in the country that you have. So now FinCEN, which is, when you file your FBAR, you file it with FinCEN, which is the Financial Crimes Division of the Treasury. Now, FinCEN is now issued some new proposed regulations, which makes it much, much harder for U.S. investment advisors, because many times U.S. investment advisors, they know that you don't live in the United States, but they put down an address. Maybe it was a former address that you had, or a relative or a friend or something like that. And their firms accept it. They believe you are becoming a U.S. resident, but it'll become more and more difficult to maintain those because all of these laws are there and they're not going away. Okay, so the U.S. May be a little bit stringier in giving information to foreign countries, but the relationships are getting stronger and stronger, and both groups are sharing information amongst each other, and they don't want, they want the taxes. I mean, it's easy to know that every country wants to get as much tax as they can. So if you are not doing it right, then chances are sooner or later they're going to find out, and you're going to end up you're going to end up paying, maybe you'll pay fines, or you certainly will pay accountants to do the compliance. And but do not despair, because it's actually getting easier. So let's go to the next slide. So in an example, okay, U.S. brokerage firms are becoming licensed to serve you abroad. So one of probably the biggest player that I know that is opening accounts for residents of country all over the world is Interactive Brokers. Interactive Brokers is a US based company, and they have various wholly owned subsidiaries around the world. In Europe, it would be based in Ireland. They issue your tax reporting, a 1099. They issue, they're not, you don't need to report them on an FBAR. You don't need to do any kind of filing for them on FATCA, because they are a US based financial firm, which provides all the information to the IRS. So Interactive Brokers is just one. More and more companies are going to get in this space as they realize it's not as complicated as they thought. Charles Schwab I believe it was last year, reopened in Germany. So this is another vehicle, another brokerage firm that is, okay, so boom, 2014, FATCA, MiFID, whatever, rules and regulations came that make it difficult. Initially, everything blew up. Like banks all over the world said, okay, no more US customers. We don't understand the rules. It's complicated. We don't have the software. We don't have the technology. But We don't have that problem very much anymore. We don't have a lot of complaints that come to us anymore that's saying that you can't open a bank account because you're a US citizen. There are maybe isolated incidents where certain banks or certain local communities are still, there's local legislation or local court cases, but the reality is it's a fact of life that they're going to have to share information, not just with the US, but throughout the world. Every country wants the information, including the countries that are trying to restrict it. And so it's becoming easier. And it's going to continue to become easier because um, Americans in the world, um, while many of them are, middle class, they do tend to have more experience with investing, primarily because they've been investing in 401ks, since the 1980s. They have more knowledge financially, and they're good customers. And so these firms are going after them. And also, there are local firms that are also options that will accept U.S. citizens. Some of the things to think about is that if you are using a local firm, do they provide you the tax reporting you need for the U.S.? Because many of them don't, because their countries, they don't require that, and the tax calculations for the 1099s are very expensive. And so while they're getting better at it, it's something you need to maybe keep in mind if you're using a local bank or whatever. Do they provide you the 1099? And I know that more of them are trying to provide the 1099 and the tax reporting information that you as a US citizen require. So this is getting better. Now, MiFID II restricted, for example, your ability to invest in US ETFs. But this too is in the process of changing. So EU, there's something called the European Investment Directive. And what they're saying is maybe this restriction on US ETFs would be eliminated. And right now, if you read the current proposed European Investment Directive, which should go into place in 2026, you will be able to invest in US ETFs. So, like, just keep in mind there was like a shock and awe because look, people weren't filing their taxes. I mean, and I'm not just talking about wealthy people who were, trying to hide money in tax havens or something like this, but regular, normal people were not doing what they were supposed to do. And now you can't get away with it. Well, you won't be able to get away with it. You will get caught because you are your information is being seen. And then, you know, um, all the shock of this, close Americans, get rid of Americans, et cetera. Okay, so now all that is calming down, and people are figuring out what it is they need to do, how they need to work within the system, and they are becoming more aware. The regulators are becoming more aware that some of these restrictions, well, I mean, think about it. If the EU is restricting, and in this case, it's not just US citizens, but it's all European residents from being able to invest in US investment securities. This would be obviously a big point of discussion between the two countries, or the United States and Europe. So there is enormous pressure going on to make things better for the US citizen who lives overseas. And it's being done not because anybody's trying to do you a favor, as we already saw, but it's being done because there's a financial incentive. And firms like Interactive Brokers have really led the way to show that all these things are possible. Now, there's still a big education, learning curve that anybody who lives overseas needs to go through. You live overseas, you can expect the rules to be the same as if you live in the US, no matter, how much you want it to be. That's just It's not, doesn't work like that in anything, right? And you just have to accept it. Financial issues are really hard to accept for a lot of people because they feel, they're very comfortable with what they do, but um, facts of life, right? And the reality is it's really possible. Now there are some issues that the taxation task force is really hammering down, because one of the issues that we have is a lack of clarity on retirement plans. So countries have retirement plans, and many of them have been started relatively recently because these retirement plans came into place as countries around the world realized that their government systems were underfunded, and they weren't going to be able to supply the needs of all their citizens. So they began to offer, I guess we could call them like IRA type accounts or pensions, where it would be very similar to a 401k, where you can put your own money and you can invest it. And in some cases, they didn't conform very well to what the IRS considered a pension fund. For example, if I have a pension, but in 5 years, I'm allowed to withdraw all the money, the IRS would not consider that like pension fund. But if I have a pension that looks like an IRA, that I can't take out the money until retirement age, or I can't take out the money, without penalties or something like that, then chances are it will be considered a retirement plan. If you have a retirement plan, then you can invest in funds, you can invest in European or global ETFs or whatever. Like, the options expand. But the problem is that you don't know whether that plan is qualified or not qualified. So in many cases, people are paying accountants a lot of money to tell them, give them their opinion. And this is an area that the Taxation Task Force is really working very hard to try to get the IRS to be much more clear on what you can do and what you can't do, and not just sort of, leave you in the air guessing, okay, I'll do it, but maybe they'll come back on me several years. It's getting better. So we can go to the next slide. Banks. Okay. Problem is that people who don't live in the US are having trouble opening bank accounts. And here we have examples of banks that will allow you to open an account with a non-US address. I know that some of these organizations have certain kinds of, we would say, membership requirements. So, for example, the State Department Federal Credit Union, SDFCU, you have to become a member of something called the American Citizens Abroad, ACA. And you join ACA, and that qualifies you for the State Department Federal Credit Union. The UN Federal Credit Union is similar. There's a small fee to pay to join an organization. In that case, it's like $50 a year, and then you can have the account. So they sometimes appear like you can't have the account because you're not part of the State Department, or you're not part of the United Nations, or you're not but there's always a small, uh, I don't know, called a loophole, but there's a way to do it. And you can open accounts with a non-US address, a non-US phone number. And so while I just have a few examples here, this is an area that's growing. So just like brokerage accounts, banks too, there are more and more options. And so when people are really frustrated, with the situation, I think it's really important to remember that it's most of these problems are relatively new, or at least we become aware of them since 2014, implemented over, many, many years. Legislation passes, but it took a number of years before people became aware. And there are changes, solutions. I know that the TTF was in conversation with the IRS last week, exactly on this issue of trying to get them to come up with pension plans and be much more, appreciative that we have these problems. And so we hear your concerns. we see solutions on the horizon, and sometimes people, they think they should make a permanent decision to maybe even renounce their citizenship. But often it's based on issues that we know are problems and will be resolved going forward. And it just requires a little bit of patience to get through these years when it's a sort of a learning curve for everybody. I think there may be one more slide, or that may be it. Okay, so the last one is, again, this issue of PFICs, which is something that a lot of people don't realize. These are what they know, what we call, no, they're called passive foreign investment companies. And you would think you could invest in them like a non-US ETF or a non-US mutual fund. And in reality, you can't. Okay. You can do it in certain circumstances, like in an IRA or a retirement plan. But in many times, people were making these investments and they're problematic. Um, the solution to this is in conversation, because there is a lot of discussion in our conversations with Congress or the IRS or Treasury about what to do with the PFIC problem. It's not a simple problem to solve, because these non-US funds are not regulated. They don't make distributions, because like in my example, in the US, you have a mutual fund, you have to make a distribution every year. All the capital gains are distributed in all the income. But you could create a mutual fund that doesn't do that. And therefore, it would be a way of avoiding taxes and deferring taxes indefinitely, because they never make a distribution. So there are challenges. I mean, it's not simple to overcome, but there are options, and these things are getting better. And these are all issues that we're at the Taxation Task Force are working to address, and we understand that they're out there. We we know of some ways to get around it often. Um, but it's not as easy as we would like it to be. It doesn't work as well as we would like it to be, and certainly probably that you would like it to be. But it can be overcome, and there are things you can do, certainly, as an investor, and even in the most extreme and rigorous countries, there are ways you can invest that would work. And I think I will stop there, Rebecca, if that's okay, and wait till we get to questions.
Thank you, Robert. So I'm just gonna wrap up here with renunciation myths and facts. So this is just kind of going into the different areas of so that you guys really know, because I think especially on a day like today, people are like, oh, I had to go through the whole rigmarole of filing again, and it's such a pain. And I think people are looking for a way out, and I understand that, but I think it's also important for you to know and understand the reality of what it actually means to renounce. Um, which only people who have a second citizenship have that option. Obviously, if you don't have a second citizenship and you renounce your US citizenship, then you're stateless. So people don't have that option. But these are the same problems that all Americans abroad are facing. But some of the myths and facts here is a fact is the fee to renounce is $2,350. I'm very aware, and we even ran a campaign last year asking for people to submit their comments to the State Department about them dropping the renunciation fee. We've gotten a number of emails from people saying that they're waiting for the fee to drop to renounce. Um, you need to be aware that we don't know when it's going to be reduced. That hasn't been announced yet. But before you consider uh, adding your name to the list, it's worth considering these additional myths and facts. So the next one is the myth of the exit tax only applies to super wealthy people. Well, the fact is that it applies to people not current on taxes for the last 5 years. And the amount of the exit tax is calculated by taking the value of your assets as if they were sold at fair market value on the day that you expatriate. And this includes liquidating any IRAs and other retirement accounts. So from that amount is deducted the cost basis to you of those same assets. And so the capital gains tax is 23.8% and due on any remaining amount over 821,000. Um, and then for the inheritance tax, the exemption from the US estate tax or the death tax, sometimes people refer to it, is currently over 3 million. But for those who inherit from a former US citizen who renounced, the exemption is only $60,000 and the top tax rate is 40%. So, this is what happens. And then the myth around you can't enter the country. Well, the fact is that I think this gets really confused. People get really confused about this one. So it's a little bit more nuanced than that. Um, Basically, once you renounce, you get treated just like any other non-US citizen. You can apply for an ESTA in order to enter the country as a visitor. If you don't meet the terms of the ESTA, then you have to apply for a visitor visa or a work visa if you need to go and work there. They can refuse you on any basis that they find. Um, and if you are found to have renounced to evade taxes, you could be banned. You must have and express what the US considers an acceptable reason for renouncing. Like, lots of people have very legitimate reasons, like if they're going to be joining another country's military or working for another country's government. Um, if the US determines you renounce to avoid taxes, um, you may be excluded from ever being able to enter the country again for any reason. So you also lose your right to vote in the US. You lose your right to live in the US, your right to work in the US, your US driver's license, and any other professional licenses that you may have acquired there. So these are just like the hard facts of it. So now what? What could be an option um to deal with the tax nightmare? Like it, if renunciation isn't an easy way out. And I think it's worth noting here that a number of people contact us after seeing like other webinars from tax professionals that are trying to encourage people to renounce. And I think it's very important to understand and recognize that um, some of those companies don't have your interests in mind. What they're trying to do is make money by um like charging people high fees in order to go through what can be a very difficult process, not only financially but also emotionally, and all of the other implications that come with that very serious and very permanent decision. So I think it's important to understand and recognize that things are changing and also that there are things that are happening. So one of the things that Democrats Abroad advocates for is residency-based taxation for the United States, because this is what most countries use in the rest of the world. And that way it would simplify things for Americans abroad. And now we don't have a bill for this yet, but it's something that we're working on. This is our kind of long-term advocacy goal. And then in the meantime, our kind of short-term advocacy goals are focused around incremental relief. So there are many different opportunities for this in terms of consolidating forms, making it easier to file, recognizing non-US pensions and non-US tax-free savings accounts, um, about trying to get them to recognize foreign tax credit relief for taxes paid on the purchase and sale of a non-US home. All of these things are the kind of short-term items that we are advocating for and working on. Um, but in terms of what can you do to help with helping, what can you do to help us help you is what I'm getting at here, in order to get tax relief for Americans abroad sooner. Um, the number one thing that you can do to help is to vote and vote in US elections, especially this year's election. And now I hear from a lot of you that you don't feel like your vote matters. But let me tell you why it does. In 2020, it was the votes in Georgia and Arizona that were the margin of victory that helped Biden win the president. Um, and it was only tens of thousands of votes that was the tipping point to help Biden defeat Trump that year. And it's likely to be the case again this year. And those were all votes, those 10,000 votes were the votes from abroad. And this is why we need you. Um, Other people will say to me that their vote doesn't matter because they vote in the bluest of blue states or the reddest of red states. Um, and they just say, oh, my vote doesn't count because it's too blue or red. But I ask everyone to vote because it's the only time that we have hard data on how many of us actually exist. And I take that data and when the taxation task force goes to Washington, D.C., and we meet with congressional offices, we say X number of people that voted in the latest election are impacted by these tax problems. And that's why these tax issues need to be prioritized. So if there's one thing that you can do, I ask that you go to votefromabroad.org and request your absentee ballot. And then you return it once you get it later this year. This is the number one thing that you can do to help our cause to get the tax problems fixed sooner rather than later. Um, and this is just some additional information in terms of voter room Zooms sessions that we host and additional information in order to help you register to vote. So what I'm going to do now is I'm going to turn on the Q&A. So go ahead and submit your questions, and don't forget to like any of the questions that you see so that we can then make sure that we organize them and we answer the questions that are the most popular ones. So hopefully I'm not seeing any come through. Is it on? Are there questions coming through? I did turn it on. I'm going to assume that it's on and that you guys are working on it. Yep. Okay, great. I can see you. Cool. So they're coming through. While you're submitting your questions, what I'm going to do is I'm just going to tell you a little bit more about Democrats Abroad Taxation Task Force and our work. So basically, as I've mentioned already, we advocate for a switch to residency-based taxation, relief from FATCA, an exemption for American business owners living abroad from the GILTI and transition taxes, and a whole raft of other things that we're working on. You can read more about our work on our blog. So you can go to democratsabroad.org/taxation. In terms of what we're actually doing, so like, for example, in 2022, we conducted a survey and also wrote up a report of the tax and financial access issues that Americans abroad experience. We host tax education and webinars like this one. We also submit statements for the record for congressional hearings and do candidate outreach and education, as well as visiting Washington, D.C. to talk to lawmakers. The report that I mentioned, if you have not read it, I would really strongly recommend it. Most of the people that I hear from who read it feel a lot less alone in these issues. You're not alone. A lot of these problems are systemic. They're problems with the system, not with you. But it is very helpful to be able to read the report and have a better understanding of what the problems actually are. And then also, these are some of our past tax education webinars that we've hosted. Some of them are free. Some of them are available just for a small donation, but any of the topics that we covered here today that a lot of these webinars go into more detail, so you can find out more information there as well. I just wanted to make a small plug for the Taxpayer Advocacy Panel as well. So the Taxpayer Advocacy Panel is a federal advisory committee of the IRS, and there's a representative from every single state, including one international member, and I am your international member on this federal advisory committee. And basically what we do is we listen to I listen to Americans Abroad. I then take your comments and suggestions, and we ask for the IRS to listen to us in terms of making improvements to customer service and communications. So if you ever have an idea on how the IRS should improve, you can drop me an email on my TAP email, as well as submit your comment on the website. And another resource I wanted to mention is the Taxpayer Advocate Service. So anytime you have a problem communicating with the IRS or resolving a problem with them, you actually don't have to be a US citizen to use their service. If you have any kind of tax issue, you can contact the Taxpayer Advocate Service. They will open up a case on your behalf, and they will liaise directly with the IRS in order to resolve the issue. It is a completely free service, and also it does not matter what your income level is, your age, or location, somebody will be able to assist you. So it's a resource that I really recommend keeping in the back of your head in case you have any problems or issues in the future. Finally, these are 7 small actions that you can take to help improve the tax system for Americans abroad. I already mentioned requesting your ballot to vote in this year's election and reading the report. We also have various resources on the website in terms of joining Democrats Abroad. You could donate to us, as well as signing up for the tax mailing list or even volunteering for us. So this is just one more reminder before you all go to fill in the feedback form, but I'm now going to turn it over to the Q&A. So let's see, where are the most answered questions? So okay, I can see the top one has been answered. So I'm gonna go to the next one. Do US citizens pay taxes on inheritance from non-US citizens? Um, so there is not enough context to be able to answer that question. It really does depend on your country of residence, um, and where the person that resided is. That was a common question in the pre-submitted questions, which we encouraged you to include the country. And so that you will be getting in the follow-up email is the answers to the pre-submitted questions. So hopefully that helps. Will my UK main residence and only home of 40 years be taxed in the US if I sell it and subject to capital gains tax? Uh, it it may be subject to capital gains, and I will again reference the blog post that I talked about earlier in terms of how to reduce your US capital gains on the sale of a non-US home. My son turns 18 later this year. He left the US when he was 2 months old. Does he actually need to start filing next year, even if he is not expected to have any significant income for the next few years? So it does not matter what your age is. This is a very commonly asked question. I think people make the assumption that if you're over 18 that you need to file a tax return. It actually doesn't matter what age you are. What matters is the income level and their filing status. And there's actually a link on the IRS website. I don't have it to hand, but it is in the pre-submitted questions. So, because this was one of the questions that came up. So if you just go to the IRS website, or you can even Google it, just type in IRS, do I need to file? and there's a tool on the IRS website that you put in your specific personal information and what your income level is, and it will tell you whether your son needs to file or not. So that's how it works. Um, has any advocacy group reviewed the legality of dual citizens being taxed by the US? For example, if you are a citizen of an EU member state, the US CBT is a violation of EU law, which prohibits taxation based on citizenship. Oh, that's a good question. Um, I don't know. Um, it's a very good question. I have a feeling that that has been, but I'm not sure of the particular details. I'm really sorry. I know that there have been challenges to FATCA, and there have been challenges under FATCA under breach of GDPR in the EU. But I'm not sure of in terms of specifically in that context. So if you drop me an email, I can do a little bit more digging and then send you some follow-up information on that. So sorry, I don't know the details off the top of my head. Okay. Does the foreign bank send the IRS your account numbers or just your name for FBAR? Um, so just to clarify, because I know that it can get really confusing. So the your non-US bank will be sending your account information to the United States under FATCA. So FATCA is that where the like data exchange is happening on bank accounts. And that's for the tax evasion. For the F bar is actually where you are reporting your non-US bank account information to the Treasury agency called the Financial Crimes Network. And that other reporting, so there's your bank isn't reporting under F bar, your bank is reporting under FATCA, which is separate for tax evasion, and then F bar is for um, money laundering. And FBAR has actually been around since 1970, so over 50 years. And it's only kind of come more into focus as more and more governments are talking to each other and trying to eliminate money laundering and tax evasion. So I hope that kind of clarifies that. But yeah, so so the next one isn't actually a question. It says, remind them that if gifting a home for a non-resident spouse might have to file a gift tax return. And then there is a few different exchanges where you always have to file a gift tax return if gifting over the tax-free threshold. Um, and yes, I have mentioned it. So hopefully that helps clarify that. Um, so someone commented and said that Vanguard told us we could keep our account, we just couldn't get advice. Is that correct? So I'm so is that a Vanguard US account? Um and also you don't say if it's an investment account or if it's an IRA or okay, so it's a US account. Yes, that can be the case. Some will allow you to keep your account, but they just won't let you do anything with it. So it's basically frozen. Um, yes, so you're saying both the IRA and the brokerage account. So yes, that can be the case depending on the brokerage firm. I don't know if Robert has anything additional to add on that front.
Yeah, let me add here that um, it depends on the country that you're in, but many cases, if you own like a Vanguard ETF, for example, or a Vanguard mutual fund, you can convert the Vanguard mutual fund into a Vanguard ETF. Now, if you own the security, you can keep it. So even if you move from Vanguard, for example, to international firm like Interactive Brokers, you can keep the ETF that you already owned. So that might be helpful in some ways.
Thank you. Um, so the next question is, first, thank you so much for the work that you and those at Democrats Abroad are doing to help us with residence-based taxation. Can't say it enough. Is it valid to ask how far away are we from actually getting residence-based taxation to become law? I mean, this is a top question, and it's not a question that I can really answer. I mean, I can give you a little bit more of an idea of like until we can get more people to vote from abroad, really, and then on top of that, more people to write to their members of Congress in order to really illustrate and how difficult the situation is. Um, I think that's one of the top issues that we face is that there's a lack of understanding of their constituents who live outside of the United States, and they just don't hear from enough of us. I get that lots of people have difficulty contacting their members of Congress. It asks you for a US address, which you obviously don't have. We have information on our website on how to contact your members of Congress, like you, in that instance, would provide your last US address before you moved abroad in order to verify that you are a constituent. Um, but it's such a like uh we were on a call, I think it was last year. So this particular congressional session, it ends at the end of this year. And then we'll have a new Congress next year. We don't know what will happen in the election. So, as it stands right now, the Republicans hold the House and the Democrats hold the Senate. It could flip, it could go both to Republicans, it could go both to Democrats. Yeah, it would be it, I don't have a crystal ball basically, but it has been a very difficult politically, as well as from a being able to pass anything in this Congress. Um, if you look at the statistics, this particular Congress has passed the least amount of bills ever historically out of any Congress. And that is, I think, really speaking to how partisan things are at the moment. It's very, very hard. Not to say that things don't get passed, but something as big as residence-based taxation, like that is a huge change, a really huge change. And the fact is that we don't have a bill. There is no bill that has been introduced even. So without a bill, it's very hard to move a policy and actually make it become law. So I cannot say how long it will take. I'm sorry. But what will help speed it up is more people contacting their members of Congress, more people getting involved and following our work and participating in the campaigns that we run, and having your voice be heard. Like there's nothing more powerful and better than doing that and participating, because a lot of people are scared and they hide. And I think that's probably the easy option, but I know the hard option is actually speaking out, but that is really what is going to help us move it forward. So okay. That question was already answered. Um, if Are we taxed if we contribute to an employer pension more than the employer? Um, I am not an accountant, so I am not 100% sure. In Germany, I believe uh we have an accountant who's or tax preparer in Germany who may answer your question on there. So I'll leave that one there. Um, I'll go to the next one. I heard we can invest in PFIC, but we just have to pay more taxes and of course pay the tax advisor. Can you confirm and clarify? So in summary, uh you can invest in PFICs. The easiest way to do that is in a qualified pension plan, or recognized pension plan. But if you want to invest through a brokerage account, and Robert may say more on that front, but you can. It's just that you do have to do the PFIC filing and also potentially owe any US tax on it as well.
All right, so
So
I'll jump in real quick here.
yeah, please.
Uh, PFICs are not illegal. Okay, you can buy them, but you turn any kind of capital gain into ordinary income tax at the highest tax rate that exists. So right now that is a 37% rate of tax. So it's much, much higher than probably ever could be economically valuable to do. But in all cases, I mean, there may be examples where you have a certain opportunity to invest in something that, has a phenomenal return. And then maybe for you, it's worth it. So there's no generalities, but it's not illegal to do.
Thank you. I think we'll take one more, because we're about out of time here. So it says, when I'm really old, frail, demented, and I've been doing my own filing, no tax ever due for a while, is there some way to just defect from further filing because, well, I'm far from a millionaire or the type of person who has advisors? So, like I mentioned, there are ways to file for free, and especially as you get older, your income, you're more familiar with your income sources. Um, so you'll be getting those links sent to you. And hopefully that will help you in terms of maintaining your tax filing compliance. There are retirees who are below the filing income and don't have to file. So it really does come down to your own personal circumstances. But I mean, what you're telling me is no different from, for example, a stateside retiree who might be getting older. And these are, I think the bottom line is that taxes are really hard for Americans in general. And then it is compounded, the complexity is compounded for Americans abroad because we're forgotten, because it's so complicated dealing with all the cross-border issues. But we are peeling back the layers and we are trying to look at incremental relief in order to provide, make it easier for people to file and also long-term get residency-based taxation so that we are not having to file because we're already filing in our country of residence and already paying tax in our country of residence. So yeah, so with that, I'll leave it there. I'm sorry we couldn't get through all the questions, but like I said, all the pre-submitted questions are going to be sent to you with answers in the follow-up email with the recording. So again, don't forget to fill in the feedback form. I would really, really appreciate your input and what you thought of the webinar. And I'll just leave it at thank you for joining us and for your time. And if you need to get in touch, there's our email. And I hope you all have a good afternoon, evening, morning, wherever you are in the world. And thanks again for joining.